Bonjour à tous, or good morning to all of you to comply with the choice of English for this session. And welcome to our panel discussion about banking supervision in the European Banking Union. Let me also remind everybody, after the congratulations that we received for Banking Union, that this would have been totally impossible without the support of the president of the ECB and the colleagues in the ECB that permitted us to grow very fast. I started in January 2014 with 5 people, including myself, and by November we were 1,000, including the support services. And the first wonderful decision of the president was to give me the best possible vice chair for the supervisory board, Sabine Lautenschläger, and we did that really, the two of us together. It's a pleasure and an honor for me to have been chosen to guide you through the single supervisory mechanism, SSM for short, and I have the pleasure to be joined by Marianne Barbalayani, by Tom Dechaine. Marianne is Directrice Générale de la Fédération Bancaire Française. Tom Dechaine is Director of the National Bank of Belgium and the Belgium member of the SSM, which is very important for me as chair of the Supervisory Board of the SSM. Édouard Fernandez-Bolo, Secrétaire Général de l'ACPR, as well as Jean-Pierre Mustier, Chief Executive Officer of UniCredito. I will keep this one to be close to the podium, but there is no plans. Sit wherever you wish. It's always challenging to take the floor after the president of the ECB and the governor of Banque de France. But let me start with short introductory remarks on my vision for the SSM and the banking union. The banking union is helping Europe to have safer and sounder banks that are able to support the European economy. We have made good progress, but we have not done yet. In particular, the banking union and the SSM must further progress to become a single jurisdiction, and it was very much stressed by the president. The key word in banking union is union, and that's where I think we can do better. This requires 3 things: harmonization, cooperation, and solidarity. First, we need to turn the rule book for banks into a truly European one. Option on national discretion should be fully harmonized at the level of the euro area. Moreover, we need more regulation on fewer directives, as directives need to be transposed into national laws, leading to different outcomes across countries. Second, countries still tend to put fences around their banking sectors. Such ring fencing was deemed reasonable during the crisis, but times have changed. We now have the banking union, and there are more benefits to be reaped from moving forwards and towards a single jurisdiction on a truly European banking sector. So in my view, we should pull down those fences. In particular, supervisors should be able to grant cross-border waivers for solvency, liquidity, and large exposure, as was stressed by the president. And frankly, this is where I expect the big bank, the large internationally active banks, whatever the country they come from, to be active, not in the defense of certain national options, which are more the fights of the past, frankly. Well, of course, it would be in the hands of supervisors. We will provide this possibility, those waivers, when it makes sense and when supervisory conditions are appropriate. This would support the development of European banking sector that is better able to support the European economy. Third, there is the idea of solidarity as embodied by a European Deposit Insurance Scheme, or EDIS. I know that solidarity is a thorny issue for some, but we cannot do without it. Europe needs EDIS, and given that the SSM has reduced risk considerably, now it's the right time for us to set it up. In the end, we have to strike the right balance between sharing some of each other's risk and enjoying the benefits of being a single jurisdiction, of which there are many benefits. Such a single jurisdiction will make it easier to address some of the challenges facing the European banks and banking systems. Let us look at some of these challenges. Banks lack profits, with a number of them not earning the cost of their capital. A larger market in which banks are able to consolidate across borders would help to get the banking sector back in shape. It would also put European banks in a better position to serve large European companies and to compete successfully with other global financial actors. Might this European consolidation result in some banks becoming too big to fail? Not necessarily. They might be too big to fail for a single country, but not for the entire euro area. Another challenge, Brexit is about to happen. Banking unions makes it much easier to welcome safely and efficiently banks that want to relocate. And not only banks from the United Kingdom, but also from other countries, as is the case for Nordea, which is moving from Sweden to Finland. And this is not true for single banks only. It is also true for entire banking systems, such as the banking system of Bulgaria that might join the SSM through close cooperation. To conclude, to meet these expectations, and that's very much in line with what the governor mentioned as priorities, the SSM needs to be an agile supervisory authority that cooperates strongly with all the supervisory, I mix my pages, sorry for that cooperates perfectly with the other European authorities and is respected by its global peers. To this end, there is indeed things we could do better. We need to improve the way we take decisions, but real delegation of powers embedded in the SSM framework would be a huge help. We need to further simplify processes, not least to avoid duplication of work between national supervisors and the ECB. We need to become fully aware that in the euro area, bank supervisors now have a European mandate, regardless of whether they work in Paris, Frankfurt, Brussels, Madrid, Bratislava, whatever. And finally, we need to foster the exchange of information and experiences between the national supervisors and the ECB. Thank you for your attention. After this introduction, I would like to start. After this introduction, I would like to start by asking two questions to the supervisors, Tom and Edouard, and I will then give the floor to the banking side, Marianne Barbalayani and Jean-Pierre Mustier, to shortly react. My two questions are how the roles of the national supervisory authorities and the ECB are to be fulfilled respectively, and what initiatives are to be taken to improve banking supervision in the SSM. Tom and Edouard, you have 7 minutes each to answer both questions. I could see the concern on your faces that I was stealing you 2 minutes. Well, no, you have indeed the 7 minutes, and then I will give the floor to the banking side to react, but with only 2 minutes this time. I know it's very short, but it will be the other way around when I will give the floor to the banking side. The supervisors will have only 2 minutes too. Thank you very much. So, Tom, please.
Okay. First of all, does this work? Okay.
You can also go here if you prefer. Up to you.
Okay. First of all, thanks for the invitation, Danielle. Well, I'm new to supervision. I was on the other side until a couple of years ago, and so maybe I have a different perspective on this, and I look at this more like a businessman. This whole SSM to me is a cooperative venture with two sides. One side, the junior side, is by far the biggest one, and the senior side is by far the smallest one, just 1 in 5 people, but clearly in the driving seats. And they both need each other. I will come to the respective roles of each of them in a minute, but it would have been impossible to do it otherwise, obviously in 2014. But the question we have to ask, had we had a blank sheet of paper, would we have done the same? In other words, is this like a camel, the proverbial horse designed by committee? And I think there are arguments to do it like we have done it, even if we had started with a blank sheet of paper. But we should not underestimate the management challenges of this setup, and they are significant. I mean, if you are, for instance, the GST co of a large international bank and you sit in Frankfurt, and you need to run this with these supervisors in many capitals in Europe, this is a difficult task. And that's why some of them are experimenting now with new structures like a matrix structure, etc. So there has to be a good reason to set up something as complicated. And I think the main reason, and has been alluded to by several speakers before, is that Europe is still a patchwork of languages, customs, but also laws. Whether we like it or not, we have a single rule book, but we have to navigate between many national rules on AML, on corporate governance, on bonuses, and the like. And so the input of the national supervisors is important. Also, the national supervisors have enormous institutional memory of these banks, and they're very good supervisors. So I think it's a natural complement to the two. I also wanted to mention LSIs, which are rarely mentioned, because my teams that supervise for Frankfurt large banks, they also sit alongside the ones that do that for the small banks. And we NCAs tend to think that we supervise them, but actually it's under the wings of the ECB. And more the ECB is pulling the supervision closer to it. And I think it's very helpful for this LSI population to sit next to the local GST members. This may not be that important for my country or for France, but there are some other countries in the Eurozone where this is a very important matter. Then, obviously, we have the supervisory board. So this is a typical European construction where each country has its representative. I think there's a lot to be said for it, because it allows NCA representatives to voice the concerns that are typical for a country. And I'm going to make myself very unpopular, but Danielle knows what I'm going to say, is that we have north, south, we have small, large banks, we also have home hosts. And I've heard all the arguments to do away with all barriers, etc., and I completely agree with this, but it's just a matter of timing. And Governor Villeroy mentioned, and I completely agree, that we should focus on the second pillar, the resolution now, but I'm not sure that the backstop is all that needs to be done. I think what is on the table now for BRD2 is an excellent compromise going forward, which should actually, hopefully, lead into the end what we all want, is the lowering of those barriers and a true banking union. But work is still to be done, and BRD2 is essential. So in a nutshell, I think this looks complicated from the outside. It's difficult to explain it to Anglo-Saxons, but I think it works, and most of the time it works quite well. And therefore, I think it's here to stay, at least for quite a while.
Thank you, Tom. Edouard?
Well, my point of view, I was fortunate enough to be there when there was a blank page. And I really think it was impossible to do as fast, as complete as we did 5 years ago. And without the ECB, we could just not have done that. We were able to build something in the Eurozone because there was already this institution in the Eurozone that hosted everyone and made this thing happen, which happened in very few. I mean, the skeleton of the SSM was ready in 6 months. I don't really remember any other European initiative that was ready in that point of time. Then it took time to go to the parliament and all the institutional equilibrium, which in Europe always takes time, but the conception of it was extremely swift. And I think it was really the only one we could have to start with. Of course, it is complex and it's new. I mean, I think we should really underline the new aspects of it, because even ECB, which was the federal institution that was before us, was essentially, for the one part, decision-making at a centralized level, and afterwards application at a decentralized level, and with more, I would say, distance between the two. While in supervision, it's a day-to-day interaction between application and the center. It's each day that we are speaking between Frankfurt, Paris, Bratislava, and all the other parts of the European banking union. So it's much more different. You have to switch the language. We had to switch to English, and it's the only way to go in Europe, even if each of us is, of course, very keen of its national language. But if we have to construct this, then now in this new building you can go in most of the parts and hear English instead of French, because we are speaking with Frankfurt day to day. So it's clearly a further step of integration of Europe. We are an example of the most advanced integration that is in Europe. So that's why, of course, because the banking sector proved to be a key in the crisis, but that's why there's much more even than banking in what we are doing. It's really trying to advance Europe, and we are at the forefront of this advance. So here, what's the role? I really believe that Europe is not 19 plus 1. It's, I would say, the banking union, Europe 27 plus 1. It's 19 that should act as one. We are not 19 and 1. We are the joint effort of 19 to act, and all act in the interest of the union, of the banking union. So here, that's why I think that national authorities really do have an exacting and very important role, because they have to make the bridge between the 19 and the 1. And they are at the forefront of this bridge. We have to bring both our national background, that's why we are here, because we know the national background, because also we have national competences that are useful, I think are very useful. It was mentioned, for instance, that we have to progress in anti-money laundering. Most of us are anti-money laundering authorities, so we can bring it to help the interaction between anti-money laundering and supervision. We are insurance supervisors, most of us. You know, in Europe, the integration between banking and insurance is much more advanced than I would say in the US, so it's also important that we bring also competence on this to the banking supervision side. So we have to bring what is the national part and make the SSM profit of this. Of course, we bring also the resources, the material resources. We are one of the highest contributors, and we should strive. We do it with difficulties sometimes in the countries, but we are really striving to get more resources, to get the expertise. And what is important is that we also contribute to the balance of cultures. It's true that maybe on the waivers, my neighbor and I, we don't have exactly the same starting points, but that's why it's important to speak and to continue interaction, and to continue it at a level that is neither Belgian nor French, that is the European level, where we would bring our ideas. For us, of course, we should try to progress in the waivers, and we have to try to progress in BRD. Tom knows that we are also very keen to try to advance in giving comfort to the host that this will not endanger their host financial stability, but really we need all the 20, the 1 and the 19, and the 19 that makes 20 to go further. And simplification and everything will come out of being more confident of a common culture that will stem from our interaction. I think the national competent authorities have a very important role in creating this common culture and being a part of this common culture.
Thank you to both of you for this encouraging remark. I remember now that Tom, you said it's a matter of timing. Personally, I think timing is crucial because we don't want to do that after the next crisis. So I find it encouraging that you mentioned this timing. Marianne, Jean-Pierre?
So in 2 minutes, right? So 3, the governor said 3. Okay, first of all, let me express the banking sector's admiration for what has been achieved. Because within a very short time span, you have been able, Mrs. Nui and with the ECB and Mrs. Lautenschläger, to build this new supervisor. And it's a success in many aspects, and it works. So we can see it every day, maybe a little bit too much, but we can see it. And why am I saying that? It's because I think it's important for the banking sector to have strong supervisors. Strong banks are also built with strong supervisors, and we do believe that in France, and the French banking sector, I think, and I hope, is a good example of that. Another point is that this whole organization has managed to build itself without losing the view of what is the European view of supervision, which is oriented towards the risk assessment. European supervisors in the past, and that is especially true in France as far as I know, have always pushed banks to improve their risk assessment and their risk management systems. And this is very European, and I hope this will stay and will not be lost in time. So that being said, what are the challenges now? I think the most important one has been underlined by the chairman of the ECB, is the risk of refragmentation. The system, to be frank, is still very complicated, not only because of the SSM, but because we have the SSM, we still have national authorities, that is the subject of the round table. But we also have the resolution authorities, we have the macroprudential national authorities, which can lead to a lack of vision of what is expected from one single institution. Maybe Mr. Mustier is better, can better speak about that from one institution point of view, but you still have many people supervising, giving constraints, and we would like to have more clarity and maybe more visibility on what is really expected. We are, as the French governor said, we are in the European area, and we are in Rue de Londres, which is somehow surprising today, but nowadays, but we still don't have made Brexit in our streets in Paris. So in this new Rue de Londres, we can also look at what Bank of England is doing with the financial institutions, and maybe because they have all the aspects of regulation, of supervision in their hands, they can provide clarity on what is expected in terms of capital planning and so on, and I think it's very important. I mentioned regulation and supervision. It's also important that we have simplicity and clarity. Who is regulator? Who is supervisor? It's often difficult to deal with rules, regulations, directives, then transposed in the national context. Then we have guidelines. In some cases, the guidelines, I forgot the level 2, sorry, the EBA is also very important in providing rules, but we also have supervisors issuing guidelines, and sometimes they more or less a little bit change the rules and sometimes add up to rules. So this is also a challenge. And maybe the last one was mentioned by Edouard Fernandez-Bolo, it's to build a real European approach and to fight the fragmentation and refragmentation of approaches. We are very worried to see that more and more ring fencing occurs, that more and more national add-ons occur, and that the free capital flow within banks and the free liquidity flow is not possible now in the Eurozone. Unfortunately, in spite of all the achievements that we have mentioned, we still don't have the possibility to have the Eurozone recognized as a single jurisdiction in terms of regulation and supervision and capital and liquidity constraints and resolution constraints. It's a big problem, not only for banks, but also for financing of the European economy, because as Mr. Draghi really clearly explained, it's not possible now to have a real global circulation of capital, flow of capital and liquidity in Europe, and this prevents an optimal financing of people and SMEs and businesses and large corporates and infrastructure in Europe. Thank you.
Thank you. Jean-Pierre, please.
Thank you very much. Thank you for the invitation, and congratulations, Daniel, to you, Sabine, and all your team for what you have achieved. Indeed, when we look back, it was impossible to do what you've been doing, and we have always criticism about Europe not moving quickly enough. But when we look at what has been done in 5 years, it's unbelievable, and I don't think anybody would have thought about it, and credit goes to you. When we go to the fragmentation, evolution of the regulation, you mentioned in your speech that we need more regulation and less directive, and I think it is extremely important. It is extremely important because if we look 5 years down the line, basically, what do we want? We want more Europe. We want more banking union. As single countries, we will not succeed. We are too small. So we need to succeed as being European, and for that, we need a single regulator, and probably, and I'm going to be a little bit provocative, but we need only one regulator. We don't need any more domestic and national regulators 5 years or 10 years down the line. Why would that make sense? And so I think it's extremely important that we all embrace the idea of Europe and we push for more Europe and for more banking union and don't find an excuse not to do that. I will comment later in my 7 minutes. I have only 45 seconds left now. But I think that's absolutely key. Now, about regulation and evolution of regulation, I think it's important that we, on one side, simplify, as you said, but it's not only on the side of the regulator, it's also on the side of the banks. And when I see all the regulations coming and all the internal manuals in the banks, I wonder how my team members are able to work. And so what we are trying to do is actually to simplify and make sure that everybody understands what we want to do, but keeping our feet on the ground and keeping common sense. Because the big risk with regulation is to just apply what is required by the regulator, but lose sight of what we do. And a lot of time people just tick the box, say, okay, the regulator is asking that, we just do that. We need to have a report on large exposure, we provide a report on large exposure. But do we take time to take a step back and look at where our risk with common sense? And I think what will be extremely important in the future is not only to mix what the regulator is asking us to do, but also to have the bankers using their common sense and to a certain extent, becoming again real bankers in a sense that let's forget about the model, let's forget about the very complex approach we have, and let's look at the risk from a pragmatic and bottom-up point of view. When we do that, we close the loop, and then I think we will make a lot of progress as well. So, I would urge that common sense goes back as well in what we do, but it's more on the banking side, if I may say, to make sure that we go beyond the regulation and really control the risk.
Thank you very much. I hope that...
And I'm sorry, I forgot to introduce a guest, actually. This is, as I'm being surrounded by regulators and supervisors, I brought the mascot of UniCredit, which is going to help me deal with all of you, actually. So that's Elket, who is here with me. Yeah.
Thank you, and thank you as well for introducing this new guest to the panel. Well, now, precisely, I would like to move to the industry issues and give the floor to Marianne Barbalayani and again to you, Jean-Pierre, to respond to 2 questions. Banks in Europe operate in a large single market that is also a banking union. So all large players in the European banking industry can benefit more from the banking union. And closely related, do you have a specific strategy to maximize the benefits from the European Banking Union? So Marianne, please.
Well, we have already hinted at many of the subjects there. The first one being the real recognition of the banking union as a single jurisdiction. We know that there are a lot of prerequisites, and there are each time there is a new prerequisite in a way. You know, it was the second pillar, now the third pillar, now the second pillar is coming back with the idea of the backstop, which was already there, but now it's becoming more and more important. And we also hear that we need to harmonize insolvency laws in Europe before really allowing the Eurozone to be considered as a unique jurisdiction in terms of regulation and supervision. This leads us to a long time, and especially insolvency law. I don't know how long it's been since the European Union has been trying to harmonize insolvency laws in Europe, but I'm afraid many of us will not be there when it will be completely harmonized. And so in the meantime, we need to be able to better finance the European economy. We must always remember that currently financing is made much easier by an ECB extraordinary policy. And this, in a way, can hide the fact that we need to be, as a banking sector, able to finance the economy with our own strengths without relying on an extraordinary monetary policy for too long. Especially since on several aspects this policy also creates problems for banks. You have mentioned the problem of profitability for banks. It's fair to say that currently it's difficult for banks to make money on their basic job, which is transformation. You know, lending long and borrowing short or shorter. It's difficult because of the interest rate situation, and this is one of the many reasons why we have profitability problems. So. I think it's still working. So to come back to the core, I think we need more trust in the Eurozone and among supervisors in the Eurozone. The question of the governance of the whole system has been mentioned, and it's true that we see a lot of distrust, and I would even say more and more of this. More and more national supervisors want to add some national add-on to the European and Eurozone action, and this creates a lot of obstacles for cross-border consolidation and cross-border lending, which could theoretically be much higher already. I don't want to give too dire an impression. Already a lot is going on since the last EBA's figure on the role of G-SIBs within the Eurozone show that between 40 and 45% of lending in the Eurozone is achieved by large banking institutions already. So large banking institutions already play an important role. They could be even much more efficient in having capital flowing across the Eurozone if there were less obstacles in regulation and supervisions and a full recognition of the Eurozone as a single jurisdiction. Thank you.
Thank you. Jean-Pierre, please.
Yes, well, thank you very much. Maybe as a preliminary remark, specifically because we're in Paris, I just would like to insist that UniCredit has a transformation plan which is based purely on organic assumption, and that the management is 100% dedicated to achieve this plan. Not going to argue that we need to have more Europe, more pan-European banks. The management of UniCredit is 100% focused on organic development of our plan. I think that should deal with any subsequent remark. So, you know, in the 10-year anniversary of the Lehman bankruptcy, you know, we focus on regulation. And that's extremely important because we need to have a system which is safe. But I would ask an existentialist question is, why do we have banks? Why do we have banks today? and specifically in Europe. We have banks today in Europe to finance the economy, but which part of the economy is important? Small and mid-sized companies represent 70 to 80% of the jobs in Europe. And we have banks to finance SMEs, of course, to finance the retail and domestic clients in each of the country. But we have banks to finance SMEs because SMEs in Europe do not access capital market. They are too small. And I hear very often that, well, capital markets are the answer to the needs of financing. No, not in Europe. And I hear as well that the Capital Market Union should cut the borrowers from the bank. Very likely for the larger companies, absolutely not for the SMEs. The Capital Market Union missed its target. The Capital Market Union should raise equity for SMEs. That's the key point. But the banks need to finance SMEs because SMEs need to finance their working capital, they need to do leasing, it's short-term financing, and it's not going to be a capital market. So if we look at what is the role of the banks in Europe to finance SMEs, SMEs need to grow in their domestic country, and they need to grow as well in other countries where they are not known by the local banks. And so they need pan-European banks as well global banks in order to help them grow. If you are an SME, if you spend 5 minutes with an entrepreneur, you can see what are his problems. When he has to build another activity in another country, it's a completely different job, different language, different regulation, different employment rules. So we need more pan-European banks or global banks in order to support the economy in Europe and make sure that the SME can grow to create more jobs. Banks are here to create more jobs, and that's important. So of course regulation is important, but what is even more important is growth. And growth in Europe will be supported by banks. So how can banks do that? Banks can do that by having a proper regulatory environment, by being able to raise capital properly, equity or debt. So what do we need? We need to have an homogeneous financial market in Europe. If you look at Europe from Mars or even from New York, which is a bit closer, today investors don't understand what is the difference of regulation, and that's the directive between different countries. They don't understand that they could understand, for instance, in the US, when they buy a US bank, they know that it's completely homogeneously treated versus another one. This is why we need to have more banking union so that we can attract cheaper capital, equity or debt, to finance the bank, which then will be able to finance more cheaply and more efficiently the SMEs and then create more growth. And if we lose sight of that, we lose sight of what we want to achieve. We want to control risk, but we want to develop growth. So more banking union is necessary. Everything which has been said about fragmentation is true. We need to go beyond that. Does it prevent us today from having functioning cross-border banks? No. It will make our life easier. But UniCredit is a pan-European bank. The governor of the Bank of Italy is here. We are headquartered in Italy and very proud to be Italian. I am Italian, not by passport, but by heart. We are very proud to be Italian. We have very good and exceptional SMEs in Italy. We are very happy to be present in Germany with a subsidiary, HVB, in Austria with a subsidiary, Bank Austria. Why am I saying subsidiary and not branch? Because if we deal with SMEs, the entrepreneur does not want to deal with a bank which has a branch. He wants to deal with a bank which is local. Entrepreneurs in Germany tell me, we've been doing business with HVB for 50 years, we'll do business with you for the next 100 years. If I was a branch, he will say, your risk process is defined in Milan or anywhere else. I don't trust you. And so what is important is that when we develop the activity, we are seen as a local bank, and then we can deliver our global presence and our product. And what does it mean? It means that today, it is extremely important to reach profitability that we lower the cost of our toolboxes. We have a presence in each country, that's fine. But we have product we need to deliver. Transaction banking, hedging, access to debt capital market. We need to lower the cost of this product in order to be able to compete against US banks. And people are saying US banks won the game and are too strong versus European banks. They don't do transaction banking with our SMEs. They don't lend them. European banks can finance SMEs, and if we lower the cost of production of our tools, Then we lower the cost for SMEs, and then it's even better. Of course, the domestic side, there is much less synergies because it's much more local. But on all the tools, we can be much more efficient. We can be more efficient by outsourcing when it makes sense. This is why we sold our asset management entity, because it was impossible as a standalone business to reach the critical size to lower the cost per AUM. But this is why we want to develop and make sure we lower the cost, and we share the cost of our debt capital market, our transaction banking between Italy, Germany, Austria, make it much more efficient. And this efficiency is passed to our client and afterwards benefit our shareholder. It is possible today to have efficient, well-working pan-European banks. We support SMEs. And this is not only a statement I'm making, but this statement was made 10 days ago by the German finance minister, surprisingly, who said in a conference that it was important for Germany to have a large global bank, headquartered in Frankfurt, I think he said, which will support the development of SMEs, because German SMEs need, in fact, bigger banks to support them. If you look at the combined market cap of Deutsche Bank and Commerzbank today, it's more or less equivalent. Some days above, some days below the market cap of UniCredit. Does it make sense? The largest exporting economy and the largest economy in Europe does not have banks today able to support their SMEs. This is a problem. And this problem has to be dealt with. It's not only a German problem as recognized by the German finance minister, it is a European problem. Europe will succeed if we have bigger banks which will be more efficient, which will deliver better services to their SMEs, and which will support growth. Thank you.
React, Tom, on Edouard, and then I will make a couple of comments myself as well.
Because I only have 2 minutes, I'll just pick up on one thing.
Said the governor, so.
Okay, so each of us get an extra minute each time. But I wanted to pick up on something Marianne said about the goalposts are being moved, and of course that's not fair. That's why I emphasize BRD2 so much, because that will be really a watershed, a milestone going forward. I'll just highlight 2 issues, because I come from a country that experienced near financial meltdown. It's difficult if you're from a country that came out of the crisis largely unhurt to understand the memories that we have of this, and that when you're in a crisis, it was, and is still to some extent, each for his own. For instance, BRRD2 is going to change 2 things. Bail-in of liabilities, loans from a subsidiary to the parent company is not going to be possible anymore, according to the draft compromise. You cannot expect somebody from a small country with a liquidity excess not to think that's important. MREL, 8%. We all know that if you don't have 8%, the state cannot step in. What do we see? There's still quite a few banks around that don't have 8%. The 8% is not imposed. I think the BRRD2 makes large steps forward in that direction. So again, as I said, timing. So somewhere it should be like when Italy and France were tunneling towards each other under the Mont Blanc. Somewhere they should meet each other. But again, there's still some road to go.
The first thing I want to say is I'm delighted to hear that efficiency is key in creating a pan-European market, because this is true. And I think this is really the first job of the bankers themselves, which is what you've just said. Our role, which is one step behind, is that we don't create obstacles to efficiency, but that what is our role, which is ensuring the security of this development, is made also in the most efficient way possible. Again, I think we should move forward. We will not have a complete defragmented market tomorrow, but we should keep doing things. I think that, of course, for SME, subsidiaries are very important, so there will be also always a home host. So we have, again, to reassure the host to allow the subsidiaries to develop. I do think also that technology will foster free provision of services. because for some kinds of market it will be very important. I think we should step up of reflection on that, because that's one of the features of integrating the market. Third, I think that subsidiaries do also have a role. It's a balancing act, and it depends on your model. Again, we are not only focus on one model in Europe. We have a diversity of banking models, and we should foster the development of cross-border activity in all these models. In the new fintech, maybe in pre-provision of services, in traditional SME, in the global markets, because there, for instance, maybe subsidiaries can borrow cheaper than branches can borrow cheaper than subsidiaries. So we have to have a comprehensive strategy of trying to make more efficient all three parts, subsidiary, branch, and free provision of services of intra-Eurozone banking.
Thank you, Edouard. I would like to make 4 quick remarks. First of all, in this single jurisdiction that we want to build in Europe, we need some European champions. But we need also, as mentioned by Edouard, all kinds of banks. We need small or medium-sized banks. We need listed banks, cooperative banks, mutual banks, public banks. We need diversity in the banking system, and a few European champions will not go against this. Also, I think it was Tom speaking about the comfort that has to be provided to the host countries, host supervisors. In fact, I would say we have reached a point where there is no host supervisors within the euro area. And never ever the host supervisors, the former host supervisors, have been so well informed and so active in the decision making as now. Everybody is around the table, all the information are known, and the vote of the country of a subsidiary of a big group has the same weight as the vote of the country of the head of the group. Even without having any bank, any subsidiary or branch on the group, you still vote as one of the supervisory board members. So I think there is a lot of comfort that has been provided before. When you had a subsidiary of a bank, you could only ring-fence the subsidiary with the hope that the rest of the group will be solid enough. A common sense in the approach of risk for bankers. I could not agree more, and I think it's difficult for us to get good bankers in the bank, because we have a very old part of, in the very old part of the directive, fit and proper rules. If we were able to have ambitious fit and proper rules in a regulation, not in a directive, that will permit to make sure we have good bankers in the bank, and that's the first thing, obviously, to have safe and sound banks. Also regarding clarity, expectations versus legislations. Well, we are not considering ourselves that we are legislators, otherwise life will be too simple. If the legislation had put everything in a regulation, that will be very easy and wonderful. We have a legislative framework which is not always very fit for the task and the challenges that we have. And we have the obligation to identify bank by bank the different weaknesses and to address them. This is where expectations of supervisors are entering into the discussion. And it's a case by case, but it's something which is important. Good bankers, mature bankers, try to meet expectations of supervisors or try to persuade the supervisors that they are wrong in their expectations, which may happen. We are not totally stubborn as supervisors. So I guess now is the time to give the floor to the audience for questions. Who would like to be the first to put? Who would like to put the first question? I put my spectacles not to miss you. Who would like to be brave enough to ask the first question? Well, to give you, okay, please. Yes, a microphone is coming to you. It will be needed. It's a big auditorium.
Hello, Marie Dancer from French daily newspaper La Croix. It's a question for Mr. Mustier. I'm not sure I understood well. Do you think it's impossible for SMEs to reach equity and the capital markets? Do you think banks are unavoidable in this scheme to get finances?
Thank you. Jean-Pierre, please.
Well, I think that as a bank, we are extremely happy to lend to SMEs, but you need to have the proper balance sheet, and lending is not capital. And so when you look at what has been developing in Europe, Europe is behind the US in terms of equity and risk-taking. So in order to support job creation, we need to support SMEs or venture capital. If you look at just venture capital and the ability to create future SMEs, Europe, continental Europe, last year in 2017, invested a tenth of the US and a fifth of Asia. A tenth of the US and a fifth of Asia. And so it is extremely important that we provide more capital to help startups, but also to help SMEs in terms of gross capital. If for gross capital, the equity to GDP in the proper ratio, I mean, Europe is well behind the US. I mean, France might be at 80% market cap to GDP. The US is 120%. Germany is at 57%. Italy around 27 or 30%. So you can see that we are lacking risk capital, which is on one side, availability of long-term risk and long-term investment. We don't have enough pension fund, or they don't invest enough in equity, and insurance companies don't invest enough in risk as well. So we need to have more capital and equity, which structurally will be directed to SMEs. Then the banks are extremely happy to finance the SMEs and to help them grow as well. So I think that's one of the challenges for the Capital Market Union, if I may say, version 2 with the new Commission, which is not so much to focus about splitting the borrowers from the lenders, but much more to look at how we can develop more risk-taking capabilities to support small companies, startup as well as SMEs and growth companies.
Thank you. Maybe if I stand, I will see you better. So where is the second question coming from? Yes, please, Pentti.
Thank you. Pentti Hakkarainen, ECB. There were references to pan-European banks and also global banks and the need for those, and I fully agree with that. Then the question is how to supervise them, and this is to all members of the panel. We have the banking union and its supervision on banks locating in 19 member countries. Then pan-European bank would have additional supervisors. How to supervise pan-European bank? Not speaking about a global bank, which is then having supervision in the States or in Asian countries. What would be your view how to solve and handle proper supervision for a global bank or a pan-European bank?
Thank you, Pentti. I guess you have the example of Nordea in your mind because it's a typically a regional bank joining the SSM. But let's ask first the supervisors, because you said it was for the whole panel. Tom, please, and Edouard. How do you see that we should welcome Nordea supervision right now?
I have no miracle solution, but the Nordea case is made easy by the fact that it has branches outside the Eurozone. If it's subsidiaries, it's a little more tricky.
In fact, Nordea was one of the few banks that chose the form of European society. And I think that has always been in my mind why it didn't spread more, because it allows, for instance, the shift that they have done of their office has been greatly made more simple in commercial law because they chose this European instrument. So what I see is that Nordea is an extremely good case where the stepping up of the SSM supervision will replace a purely national supervision, but inside the European Union. So we apply normally more or less with the national options, of course, with the national options differences, the same rule book that the Swedish colleagues were doing before. But here, in fact, what I see is we are at the SSM, we are a more larger college that should integrate the views. I mean, the Nordic supervision was always very cooperative between all the supervisors of the Nordic country. I think the challenge is to show that SSM, and I think we can, are able to provide the same degree of cooperation of a global perspective, enhance. Because Nordea was a GSIP. I'm not sure it will remain a GSIP this year, but it's clearly a global player. And I think that they chose also SSM because I think SSM is a more strong supervisor, and strong banks, I think, need strong supervision. So the interaction that we will have between the ECB and the national authorities, we will for the first time look at Nordea. Mm-hmm. It's clear. We had no chance to look at Nordea. I think we'll enrich the supervision, and I think the tools we are trying to develop as day-to-day supervision in our SREP methods, in our approach to the national options, will be an enhancement of the supervision of Nordea. I'm convinced that we will have a more integrated in the international standard supervision of Nordea.
Thank you. Marianne or Jean-Pierre, you want to add something?
There is not much to add because we are not supervisors, so we will not have to deal with the supervision of any new large entity coming under supervision of the ECB and SSM. I think it's an improvement that these large institutions are supervised from a non-national supervisor. At least on paper, it's the theory of the capture of the national supervisor. So on paper, I'm not a theoretician, but I've read these theories, and we've seen a lot of these during the crisis. It's true that one of the major progresses made in the Eurozone, and as far as I know, a unique progress. I don't see any other place in the world where we have a supervisor that has solved the problem of national capture of supervisors. So it's one answer, and I think it must be supervised on a consolidated basis. It's very important that one supervisor has the supervisor has a view of the situation of the bank, especially since it's active in different countries. Thank you.
Just to answer your question, how to supervise pan-European banks. UniCredit is one of the few true pan-European banks. We have a presence in 14 countries, Italy, Germany, Austria, in the EU, but also in Central and Eastern Europe. And I think the process works very well with the SSM. And what we have to do, as I said, is to have more banking union and one supervision in order to make sure that we converge towards a more unified view that can be on models, for instance, where some host countries want to have their specific model. One of the countries where we operate want to have a specific model for charities in terms of credit. For 200 or 300 million euro exposure does not make sense. So the SSM is working on that. That's afterwards in terms of overall liquidity management. We spoke about the issue in terms of capital, fragmentation of capital. That will be the case even more when we look at MREL with the internal MREL and the tension that exists between the various supervisor in order to make sure that we have something which makes sense, and as well on the GCF exposure intra-SSM in order to hopefully cancel it in order to be more capital effective. So I think the SSM is working very well. We have the College of Supervisor which is meeting and reaching proper decision. But of course, we are only at the beginning after 5 years, and as I said, I think the target in 10 years or 20 years will be to have only one supervisor, and that's where we're going to go.
Thank you very much. I would say that these bank, Nordea and regional banks, will force us to cooperate more and better. Already, when I was sharing SEPs, Kerstin Avjovnik from Sweden was the vice chair on what we introduced in the SEPs, the colleges, joint on-site inspection, was part of the so-called Scandinavian arrangements. This is what we translated. Now we have banking union, which is already quite integrated, but they ask us, those countries which are not in the banking union, to do even more in the colleges, to share more, to give them a bigger say. They understand that, well, the decision is the supervisory board in Frankfurt, but still they will force us to cooperate even more and better, which is always beneficial, I think. One more question, Sabine, please.
You were faster. Don't overdo it, then it's not, credible anymore. No, we talked quite a lot about the single rule book, about regulation, harmonization, which we still need. I fully join you there. But I would like to look forward to the risks upcoming, perhaps, and talk about perhaps a needed different coordination of microprudential supervisors with how can I say this, national experience in assessing the macroeconomic environment. I'm not talking about macroprudential oversight. Don't misunderstand me here. Yeah? I'm talking about that supervisors in the conjunctural cycle we have right now need to think about the upcoming risks, downside risks, RWA calculations, provisionings, etc., as we have so many quarters of sunny times now. So looking forward, do you see the need, and if how could we coordinate to get more national experience in the assessment of macroeconomic risk to the microprudential supervisor in order to assess credit risk better for the upcoming cycle?
Thank you, Sabine. That's a tough one. Who would like to respond? Marianne? Edouard?
It's a difficult question, but I mentioned that we see a lot, we still have a complicated system from the bank's point of view. And it's true that we have the SSM, we have the resolution authority, we have the macroprudential authorities. Maybe, so some coordination would certainly be useful. We see one tool that you have as supervisors to take on board the type of macro risks that you're mentioning. It's the stress tests, so they are conducted every year or 2 years, it depends. And the EBA has to design scenarios, so I think it's one way probably for you to better see what macro risk can do to individual institutions. And also maybe developing a relation with the macro-prudential authorities, and I would say the central banks. As you know, in Paris, we believe in a strong link between the central bank and the supervisor. It's been a long-term view. And one of the reasons for that is that the central bank is the place where you can have this view on macro problems, and it can be transferred in a way to the supervisor if the link is appropriate. Thank you.
Thank you. And we do have central bankers around the table. When supervision is not in the hands of the central bankers, they are around the table of the supervisory board as well. So we do have this flavor. Edouard?
Well, I thank Sabine because she gave a wonderful example of where we can certainly try to do more value-added inputs, because that's what we are seeking, to try to give a more skilled contribution to the SSM. I can tell that we have the chance to be an integrated supervisor in the central bank and also in other parts of supervision. And for instance, we are in the process of integrating a common data lake for all the information that is in the central bank and the supervision. So for us, it will be, I hope, an additional tool to be put to the use of the SSM. And what I think we need here, like in other things, is to confront experiences and needs, so that we can also be guided in what will be more useful to use in our toolbox, in the data that we have, but we really want to do that. In fact, one of the areas of frustration up to now is when we confront benchmarks done by the ECB, which we don't know how they are doing, and when we see the application in France, we say, well, maybe we are not completely okay with this benchmark. If we can confront the data, we will love to do it, to be able to invest in confronting the data, and so improving your benchmark and ours, of course, because we certainly have much to gain to see what the ECB has on other countries. So again, this is this idea of developing how to better use the data that we have, because we do have a lot of data that we don't use that well, because we are only using for one purpose, while we should be able to use it for different purposes. So I think that's really a field where we most welcome developments that could value add.
Jean-Pierre, please.
Yeah, I think the beauty of having a pan-European bank or presence in 14 countries on one side is that we benefit from the best-in-class processes, and we do that, for instance, on the business side to improve some of our mobile processes, whatever, but also we benefit from the worst crisis which can happen in one country. And when I spoke about having people who have the experience and the common sense, we can use what happened in a country to have a proper stress test, but use also the tools which have been developed in a country to fight a crisis and to preempt and develop the same tools in another one. So I think it's extremely important at the bank level and of course at the supervised level that we learn from experience, and that when we have a micro issue somewhere, we can take stock of it and build up expertise which can be reused somewhere else. And it's we know crises come always back, but they might come from one country to another, etc. And building on that is absolutely key. And we experience that these days, actually. If I won't be too specific, but it's very clear that experience built up in a country can be very useful in another one.
Thank you very much. One more question or more? Yes, please, Yanis.
Well, thank you for the excellent presentations. Regarding non-performing loans in countries with legacy assets, I could refer to Greece. Greece has just come out of the program. Still, markets are cautious despite the progress. It's reasonable. NPLs are being reduced, but at a small pace. Banks are trying endogenous solutions like write-offs, sale of loans, curing, etc. Do you see, given the constraints and given that capital is not easy to be raised, private capital still, at least, and markets are cautious, do you still any exogenous solutions like asset management companies or asset protection schemes? Do you think that the moral hazard issue is more important than other issues here? Or you're favorable to this kind of ideas?
Well, I would say that there are all kinds of non-performing exposures. There are loans to large corporates, loans to SMEs, loans to households, and when there are mortgages, for example, that's even more delicate. Also, due to the magnitude of the size of the non-performing exposures in the SSM banks, we need to use all kinds of solutions. There is no single good one, not even 2 or 3 good ones. I think first of all, probably have to be addressed through sales the strategic defaulters. There are a number of banks in the countries and the banks which are burdened with non-performing exposures that are not reimbursing the loans. They could, but they don't do it because other borrowers are not reimbursing. And I was in Greece, as a matter of fact, when the first electronic auction took place, and it was a big success of a typical strategic defaulter, and the auction permitted to reimburse the banker, the government for the tax that were not paid, on a few other people. So it demonstrates seriousness of in addressing the issue is the beginning. For example, these auctions have not been so numerous, in fact, but the only fact that they exist, and that some people could find their property all of a sudden in an auction if they don't take steps to talk to their bankers, is doing a lot. Something else which is very useful and was invited in Ireland, the split mortgage, because precisely it's difficult to fix the issue of non-performing exposures in the form of mortgage, to define case by case what is sustainable for the household, consider that this sustainable part is the new mortgage, forget about the second part, and provided it is performing this sustainable part, it's considered cured. And only if there is a default on the sustainable part, or after everything has been reimbursed on the sustainable part, there might be discussion on what happens to the remaining part. I think that's a very good tool as well that could be used in other countries. But I'm pretty sure bankers will have a lot of imagination to find solutions. And for example, you have sold in Unicredito dozens and dozens of billions of non-performing exposures. So what is the good way of doing it?
Well, dozens of billions, I wouldn't go that far, but we sold a few dozens. We sold a few dozens, but I think first of all, the reduction of NPL has to be looked at, more or less a third is coming from recovery, a third is coming from write-off, and a third is coming from disposal. So, let's make sure that we do our traditional banking business, which is we work on the recovery with a dedicated team in order to get back money the best way we can do it. You mentioned asset management companies. I think it's super complex to sell NPLs when you look at it. So for large banks, they can have teams to do that. For smaller banks, and we need the smaller banks. I fully agree with the fact that in Europe we need a big diversity of banks in order to tackle all the clients. Maybe to have a common entity which will help the smaller banks deal with their NPL issue, in terms of structuring, could make sense. To have money which is invested in NPL on a if I may say, purely economic and private basis might be dangerous. You mentioned the risk there, and I would concur that we can have a moral hazard developing, so one has to be careful about it. But I have two remarks to make. In Europe, it's fair to say that we don't like to take the pain first. I mean, we like to wait, while in the US, banks take the pain first. And it's cultural, because in Europe, if we take the pain first, we show that we make the mistake or we failed. And failure or mistake in Europe is culturally unacceptable, while in the US, this is something which helps you be a better banker or a better person. So taking the pain first is important. When it's behind you, then you can move forward, basically. And I think it's, we need to push that and to do that. This is what we apply at UniCredit. It is super unpleasant, but it is rewarding. The second thing, and that's something where we don't always have the same view with the DG4, for instance, at the ECB, is that we have pockets of NPL which are coming from underwriting processes which are from the past and have nothing to do with the bank of today. If we sell them, we crystallize a loss, which in event will arrive at one stage. And then it impacts all our ratios, the LGD, etc., which means that the capital allocated for new origination will be very different, and that could penalize us, because we'll have, versus a bank which has not sold the NPL, we'll have a capital requirement which is higher, so we'll be less competitive. So there are proposals in order to find exemptions or to look at specific ways, not to penalize, if I may say, the future. I can understand that the past is penalized in some ways, but to penalize the future will have a very negative impact on the ability of banks to finance the economy. If it's exactly the same bank, the same underwriting process, I fully agree that we should have the additional capital requirement. If it's coming from a bank which was acquired 10 years ago, I think we need to look at it in a different way. it's a constructive tension with the regulator about it, and I
Well,
hope we'll find a way forward.
A constructive tension that got positive responses, in fact. So we accepted to consider that the loss given default is not necessarily hit for the future when certain conditions are met. But we have to be cautious. That's why, well, you have to discuss a lot with DG4 and also with the bosses of DG4. As a matter of fact, before we find good balance, because it's a Pandora box. When you sell and take a loss, you realize your loss given default. To consider that it is without consequences for the future could be a little bit too easy. But it's managed, and this is precisely where expectations are coming from. Banks that are addressing seriously the non-performing exposures, their legacy assets, are heard by supervisors. We want to help them.
I fully agree with that. I mean, I have to give to DCB what DCB deserve, and DCB has recognized that in specific case for UniCredit, for instance. And I think we look forward to making sure we can recognize other pockets of loan as well in the same way.
Well, thank you. Last one, if it is quick. Yes, in the.
Good morning, Cyril Pouvel, head of the research unit at the ACPR, and thank you for this very interesting roundtable. I'll try to be quick. It's not meant to be quick, but I'll try to be. Some academics and the former Director General of the IMF have argued that the too big to fail issue has not been addressed comprehensively. At the same time, the need for European banks to increase their profitability point to further consolidation, mergers, and so even bigger banks. So do you see a possible conflict of objectives there? And how would you answer the academic view on that? Thank you.
Well, again, some banks might be, after mergers, too big to fail for a single country, but we have to consider ourselves a single jurisdiction, the sooner the better. And I think there is a lot of margin. I can quote you certain data that I have with me. In fact, the capitalization, the market capitalization between the US and the Eurozone banks, and this is as of end of 2017. In the US, we have JP Morgan, 300, I will say it all in euro, 309 billion of euros. Bank of America, 256. Wells Fargo, 249. Citibank, 164. Compare with that, we are very small in Europe. I think we have a little bit of margin. Santander, 88 billion of capitalization. So 50% of the force in the US. BNPP, 78. UniCredit, 35. Société Générale, 35. Deutsche Bank, 33. So that's the situation in Europe. So and if we look at that with the fragmentation, the impediment to interstate banking were suppressed in the 80s in the US, and the impediments to conglomerates in the 90s. So you see there is some link with fragmentation, clear link with the fragmentation that we know in Europe. Again, I think we have to be cautious and prudent. For example, the waivers that we are discussing, they should be in the hand of the supervisors, and supervisors should be able to put expectations / requirements when there is an authorization which is given, which is the case for merger, to make sure that we get the new bank, the result of the merger, safe and sound, with enough capital, enough liquidity for sure, and not extravagant large exposure policy. I think it's still reasonable, and there is still room for development. So with that, maybe I think it's time to conclude. I'm glad to see that we could go on discussing the banking union for quite some time. And I am very happy to note that everybody is in favor of the SSM and banking union. And also not in the same fashion and not with the same timing. But there are no diverging views. So that's quite interesting and rewarding. But we need to be disciplined. There are other speakers that wait to go on their exchanges with the audience. So let me ask you all in the auditorium to join me in thanking the 4 panelists for their great and lively contributions.